Good morning, ladies and gentlemen. Today is December 30th, 2020, and tomorrow is New Year's Eve. And I'm back with another edition of the Wednesday live show. So I thought we'd take a quick look around the markets, and we're going to look at the three open trades that we still have left. Had a few closed this week. And maybe take a look through the pending trades real quick. And that's about it because things are likely, it's still kind of a holiday week. So I hope everybody had a good holiday. And this week is, well, I mean, there's been a little bit of action here and there, but basically it's still holiday week. And so next week when I'm back here, it's going to be 2021. So that's going to be interesting. I think everybody's glad to get 2020 over with. But it's been a been a great year for the markets, pretty much so. Actually, it's been sort of a wild year, but it's ending up pretty good. So, speaking of which, we'll just pop over here and look at the year-to-date S&P. So, yeah, the funny thing is the year started off sort of with a bang, right? Like way back over here, right? There's year to date. Way back over here on the left side of the chart. The year started off pretty good. And then there was this little dip here. When did that dip start? A little dip towards the end of January down here. Um, is when we started seeing all these news reports about the COVID virus in China, right? And the market, amazingly enough, the market kind of shrugged it off for a period of time. And then all of a sudden, it looks like about February 20th. February 20th, all of a sudden, it started showing up here in the market. I counted this at one time, but I think it was like 23 trading days from intraday high to low, right? A lot of people don't count that low down there because obviously, if you just take a closing basis, I think the market was down around 30%, but it was really close to, as I recall, like a 40% drop in the market in 23 days, which is just incredible. I mean, it's probably, you know, well, it's aside from like notable crashes or whatever, it had to be like one of the fastest, bear markets to ever manifest, right? But and the crazy thing about the whole thing, and so I guess if I was going to do like a year in review discussion, now would be the time. So pardon me for a minute while I talk about it. But at the time, it just seemed really crazy, and it happened so fast that I think it took a lot of people by surprise. I mean, if you think about it, 23 days for almost 40% decline is just incredible. And then, man, down here at the lows, the government, the Fed, and the Treasury pulled out. They pulled out, the big guns, the bazooka, as some characterize it, and they reversed the whole thing. Amazingly enough, so and I mean, they did everything that they could to basically revive the market, and obviously did a pretty good job at it. So, and as we sit here, the Fed is basically pumping $120 billion a month of liquidity into the market. So I think I read somewhere like yesterday that 2000 and was it 2017, the federal debt was like 20 trillion, and now we're going to be at like 29 trillion or whatever. So yeah, I mean, basically they just flooded the system with liquidity and managed to reverse it. And so, consequently, there you are. S&P is having a pretty darn good year. The funny thing is that, obviously everything's measured sort of, and I won't call it arbitrary, but, in the big scheme of things, anytime that you pick a starting date in relation to now, it's kind of arbitrary, but obviously, things run on calendars. So, year to date, I'm gonna pull this up on my other screen here just so I can get a fairly accurate. It's hard to remember all these numbers, but so I mean, S&P is up year to date, basically as of yesterday's close. It was kind of basically flat this morning, but um, almost 16%. Pretty amazing. 16% year up, which is a really good year. Typically this time of year all the big firms make their predictions for the year, and as long as I can remember, it was always safe for these analysts to come out and say we expect the market to be up 8 to 10% next year. Right? And and so I mean, to have a year where the market sold off 40% and then ended up rallying 16% and is just extraordinary. So it's been an extraordinary year any way that you slice it. So some of the other more interesting things is like how everything's kind of performed this year as far as asset classes. Bitcoin is up something crazy. I don't even know what the percentage is, but yeah, the funny thing is, let me see if I can even get this on the screen here. I'm gonna try and pull something up on the screen here. We'll see how this works, just for the fun of it. But there we go. So this is the year-to-date performance of basically all the futures. So I got this chart over at FinViz. It's always fun to look at because it's just a really good perspective on all the different asset classes and how they've performed. Look at lumber up 82%. Wow. And the VIX, that's even crazier because I mean as big as this rally's been and the market at all-time highs and that the volatility has remained elevated since the beginning of the year, which seems kind of interesting. And look at that silver. Silver up 47% and the Nasdaq 100 up 46%, and that's year to date. Right, so I have year to date selected here, and so the Nasdaq 100 obviously is the Qs, and a long time ago I put this horizontal line. This was the all-time high in February before the big sell-off, and then look at that, just absolutely amazing run off the lows, and still up 47% from where it started the year here. So just really kind of a crazy year. Obviously, everybody knows that. Look at that, gold up 24%. Wow. Russell 2000 has been one of the big performers. People going in the small caps. So 18%, and there's the old S&P. So as of well, this is the future. So the actual S&P index is up about 16%, so 15.5%. Pretty amazing. Let's see what's down at the very bottom of the list here. Oh, there you go. Oil, heating oil. It's been sort of a warm summer, I suppose. With the lockdowns and different things going on and people not traveling as much and all that, you can see that basically gasoline and oil are the big losers this year. So, and the US dollar, right? So that's kind of interesting too because the US dollar, I believe, is sort of at multi-year lows against basket of other currencies, and that's obviously helped juice the performance of stocks because stocks are priced in your local currency, right? So like Venezuela, their stock market's up over 1,000% this year, but I mean their currency, continues to lose purchasing power. So that's all relative, but Anyway, this is always fun to look at. You can, excuse me, if you go to FinViz and you hit futures and performance, you can find this. And, at the close tomorrow, then this will basically be like the, the 2020 recap of how everything performed. So my guess is, nothing's going to change that dramatically between now and then. But anyway, it's kind of fun to look at. So thought I'd bring that up. Let's see. So, real quick, go back to the S&P 500 year to date. Let me zoom in a little bit here. The rally off the lows, pretty extraordinary, and then it got weird here in the summertime. And look at all those like tight ranges. It was just kind of there wasn't a lot of volatility, or I should say, up and down volatility, but it just kind of traded in really super tight ranges and kind of went parabolic, right? And then there was a couple of dips here, formed a perfectly symmetrical sort of triangle, and when it broke out of that triangle, it hasn't looked back. And so here's where we are right now. We're on sort of this is an odd shaped sort of pattern, and here's the thing. This particular trend line right here is basically that's the uptrend line for right now. And back here, let's see, what day was that? 12/21, ahead of the holidays. We had one, like, intraday sort of sell down, and then it rallied back up and it's continuing to go up. Yesterday was kind of weird because the market opened at an all-time high and then basically sold off. And under the surface, like the small caps really got hit yesterday. There was a lot of, big percentage down moves and a lot of the growth stocks. And so, you know, predictions going forward are practically useless based on, sort of where we are with I mean, man, there's so much going on, right? I mean, we have a change in the administration coming up, and that's going to be kind of interesting. We got all this political garbage, we got the vaccine and I mean just all sorts of things that you would think, I mean, if if somebody hadn't watched the market or didn't know anything about the market and you basically did a recap of the year, you'd think that the market would be a lot lower. But it was interesting. Bob Pisani on CNBC yesterday basically said that without Fed intervention and them creating all this money out of thin air to provide liquidity or whatever, the market will be a lot lower. Nobody knows how much lower. 30-40%. So but and then also, those of you that have been doing this long enough probably have been doing this for as long as I have, are probably noticing similarities to, like, back during the dot-com bubble, right? That's the thing that always gets me and um obviously that's been going on for a long time. It's not the first time I've mentioned it, but just companies going public that have no revenues, and valuations of companies that, I think I saw last week that something called BarkBox, which is like a monthly subscription for your dog, right, is going public through a SPAC with a valuation of $16 billion. So it's that kind of thing that that you scratch your head at, and just the valuations of lots of these companies. I mean, it's no mystery to anybody that Tesla's market cap is more than every other automaker on the planet put together, right? Just stuff like that kind of reminds you of way back in the late 90s when you know there was nobody cared about valuations, and it just turned into like sort of a little mania, right? And so every day now I'm seeing stuff you know about that just reminds me that we're in a potential mania. But the thing of it is and valuations are, obviously, at the high end of historic ranges, so and everybody knows that. But at the same time, these things can go on and they can get crazier. So, applying and and the other funny thing is, I read these things that being cautious and being conservative as far as like speculate and as far as speculating in the market has been underperforming as opposed to like throwing caution to the wind, and buying stuff without any regard for valuation. And so that's been the winning strategy. So there's been so many stocks that have just, gone absolutely nuts to the upside. And and so how sustainable is it? Who knows? And does it matter? Well, it's gonna matter. All this is gonna matter someday. But the thing of it is as long as the market, holds on. See, that's what these trend lines are all about, right? Like I always like to draw, the most near term sort of trend line, which is this, and then I'll look at this and I'll say that, until this trend line breaks, then, everything's good, right? So there's no reason to be concerned as long as the market's above that trend line. And then, if it breaks that trend line, there's support levels, there's a big level of support, that it may just dip and then bounce off of it. So who knows? But it's been a crazy year. So anyway, with all that said, the system itself does what the system does, and fortunately, it's all automated on the back end, and it doesn't have anything to do with what I think or what anybody thinks. It doesn't try. It's using data and numbers and technical analysis and all that good stuff to figure out which stocks are setting up for trades. And then, of course, the rest of the story. It's all about, stocks triggering in and all that good stuff. So it's had a really good year too. Um, so without further ado, let's jump in and take a look at these open trades real quick. MOH. MOH triggered in here at 206.50. Well, that was a trigger price. Triggered in at 206.50 was the trigger price. Looks like it triggered in a little bit over that at the open here. So this is the most recent open trade here. And it's kind of interesting how it's just sort of in this little sideways pattern here. But nevertheless, decent looking stock here. If I take a trend line across these highs, it looks like it's really sort of close to breaking it, right? So as you guys know from the past, a lot of times the system itself, like the system's is not using trend lines. It's basically looking for a change in trend here, which it detected, right? Nice little dip. Change in trend is kind of confirmed here. And so if it's able to break this trend line here, then it's going to have a pretty darn good look to it. Here's what's funny is I was mocking this up. I guess this would have been last week, last week or the week before. But anyway, I was mocking this up about, the stock pulling back, pulling back, pulling back, and the price coming down and like, meeting it out in the future. And so the funniest thing about that is my little mock up there when I draw this trend line, like my little mock up is like, would have been perfect if it's set up like that. But every now and then, I'm going to take that off of there because it's no longer relevant. But every now and then we see this where a stock actually, I mean, it doesn't pull back as much or as deep, or it just turns out a little bit different than you envision, which is fine. So far so good on this. It's only been open for a couple of days here, but that's the newest one. So there you go. Next on the list is Nio, which is, I believe this is an electric car maker, right? Had a heck of a good start going here. Basically just ripped higher for what was that, 6 days, and then had a little bit of a pullback. Looked a little dicey, and so yesterday was a pretty nice little reversal type of move. But it's still trying to gain its footing here, right? So it could chop around. It's a pretty volatile stock. It could chop around in a range. It could start to take off from here. If you look at what it's done in the past, boy, this has been one of the really big winners. Look at where this thing started from this year. I mean, this was basically a penny stock back at the beginning of the year, and it went from a couple of bucks to almost 60. So with a couple of decent dips in between those, these couple of dips right here would have looked, if you like zoom back like at the time, those were pretty big moves too. And so this was an inexpensive stock. But here's the thing: EV, the electric vehicles, is basically like one of the it's been one of the hot sectors for a while now. And so, and there's pretty good fundamentals behind it. Now, I'll personally question how many years it'll be until everybody in my area is driving electric cars. But there's been certain countries, and I think even states. I don't keep up with this stuff that much, but I mean, there's countries that have mandated that all the cars on the road have to be electric by a certain year. So there's going to be a big scramble, and of course there'll be winners and losers, but but it's just like everything. So I mean, some of these things, like what's that one, NKLA. These guys, this is an electric vehicle, supposedly an electric vehicle manufacturer or whatever, that may or may not be legitimate. And so you can see that it got this big run up, and look at that, just some really sketchy price action. But at the same time, you got a lot of trading up here, between 60 and the high 70s, and now look at the thing. So it's like anything. Um, whenever you get into like sort of I'm not going to say a mania. It's not really a mania, but whenever there's like back in the day where gold and silver stocks were exploding higher, and gold was at new all-time, well, actually gold and silver, gold itself is close to an all-time high. But there's a period back in, like, I think it was like 2011, when gold made this huge move, and then you get a lot of like really sketchy companies that pretend to join the space. Same thing happened with like blockchain a few years back, right? And pot stocks. I mean, and I don't know if you remember, how many of you remember the what were they called, like the mining stocks, like I can't even think of it, but it was one of those sectors that years and years ago, rare earths, that's what I'm trying to think of. Rare earth minerals, right? And that was a good, that's still a legitimate story. And so there was all these like rare earth stocks that just went parabolic. And because the idea was that, there's a very limited amount of these resources, and they're going to be needed. They're in everything, cell phones and all that. And so you have these rare earth stocks that basically sort of turned into a little bit of a mania. And then all these years later, they're none of them are really still. There might be a couple still around, but you don't hear much about it. There was one in particular, what was it called, Molly Corp or something like that. I mean, stock just went parabolic, and then I don't even know if they're still in business or if they filed Chapter 11 or whatever. But anyway, my point is that over the years, various sectors come and go from favor, and I've always said the market's more of a popularity contest than anything, and so this year was the EV stocks have been one of the sectors that has really done well. And so, obviously with Tesla leading the pack, crazy thing about Tesla, to me anyway, is the idea well, here, let me go year to date here. Back to my year to date. Crazy thing about Tesla is this move here. So, it started the year at, and this of course is split adjusted, but it started the year at $85, say. $85 to 673, and they just added it to the S&P 500. So, and like I said before, this is the Mac Daddy of the EV stocks, and valuation wise, the market cap is more than every other car maker on the planet put together. And the fact that they added it to the S&P 500 after this run, it seems kind of crazy, but it's a very controversial stock because, you know, I mean, even before the beginning of this year, I remember, there's lots of haters of the stock saying that there's no way that Tesla's gonna the Tesla's worth what it was, back at the beginning of the year, and then this move is just extraordinary. And so this is kind of like the poster child of the current, and like I was saying before, the dot-com days. And I got nothing personally against Tesla. I've never shorted it. But I know a lot of people have. A lot of, theoretically professionals over, the past couple of years have constantly pointed out that Tesla couldn't possibly be worth its market cap, and that was prior to this move. So who knows? But I didn't mean to get all off track here. But we were talking about Nioh, which is one of the EV stocks, open trade. So, and then last but not least is this GDS, which is kind of it seems to be holding its own, right? I mean, it triggered in way back over here in this area, about $90, and kind of chopped around sideways, chopped around. There was this long range day and then this gap up day that basically like put it at the target briefly, right? And now it's back into this range, just kind of having a pullback. A couple days ago, with this trailing stop, or the initial stop having been raised twice, it was a little bit vulnerable here, right? If you look at the ATRs of these particular days, it was kind of vulnerable here, but not a big deal. Trailing stop, a couple of bucks below what would have been the entry price for most people. Um, and so it's still managing to hang in there. So, but that's it. I mean, 3 open trades, and one of the reason for that. Let me go to the closed trades here. So we had a few more, but a couple of these ones that we looked at. Actually, this EGOV turned out to be a really nice sort of winner and I mean this is like picture perfect. This is exactly what you want to see. And if I was gonna show an example of like how the system's designed to work, this would be it. So I went over that last week. But anyway, trailing stop basically started down here. The stock just took off at a 45-degree angle. That trailing stop ratcheted up until it got really super tight up here, basically. So that's the thing about the trailing stop is it's a function of price and time, and it's certain times it's going to after a certain point, certain type of move, which apparently this one was, it's going to tighten up and just basically it's basically going to follow right under the previous, somewhere under the previous day's low or day or two's low, so that when it finally cracks like this, then you've basically like maximized the profits. So from here, I mean, it could rebuild and continue up, or it could go into another sell-off like this. But anyway, so the EGOV turned out pretty well. 10%, and then there was a couple other ones that, like this QDEL, it just never quite got anything going, right? So, but we're talking roughly 5% here. So it just didn't happen. And quite frankly, well, it looks like yesterday the initial stop would have gotten hit too. Sometimes if a stock sort of does nothing and the stop comes up, trails up, it'll tag it, and then sometimes it actually recovers and goes on. But I was never a huge fan of this one to begin with because of this gap. But you can see back over here earlier in the year in the summer, this particular stock, we had a trade in this that did great. I mean, it was a huge mover. So anyway, this time around, basically, and then the other one, the CYRX, same sort of thing. The trailing stop got tagged over here, and this was only like a 2.5% loss, which was nothing. So just another one where and I drew this line. This was the big resistance line, right? Like triggered in and then kind of chopped around sideways, and then it never actually was able to get any traction to the upside, never broke out. And so same sort of thing. It's all about cutting losses short. And I wouldn't really say it's like cutting losses, but it's basically just a wash almost. So, a couple of percent, 2-3% from entry to stop. And so, going down the list of closed trades, here's one that did what it's supposed to do, and that's it. Took off, went up, hit the targets, and I think this one probably got closed. This one probably got closed here for earnings. So I don't always, once they get closed, I don't always mark that on the chart. But my guess is this was it got closed over here ahead of earnings, something like that, or maybe it did actually tag the stop over here. I'm not sure. Sometimes I don't remember the particulars, but we had a lot of actually prior to these last few, we had a really good batch of. You can see the percentages. You can see the percentages over here. This is basically the column that shows the percent using just the trailing stop. It doesn't really it doesn't show you whether it hit the target or anything like that. But we had a pretty good batch, and you can see that the real key to everything, in my opinion, not my opinion, but in real life, if you look at this column here, this minimum is basically the trigger price compared to where it hit the trailing stop. It doesn't include taking profits at the target. It just basically it's trigger price compared to where it finally got closed after it hit the trailing stop. And you can see that the idea is that the winners are bigger than the losers. I saw someone that well, you see this a lot. I mean, it's one of those sort of old Wall Street things where every now and then you'll hear somebody say, well, only 50% of my trades are profitable, but the ones that are profitable, make a lot more than the ones that are losers. And so basically the idea is, and Jeffrey always says this, you want more winners than losers, and you want your winners to be bigger than your losers. And so that's basically what we're looking at here. And so that's and you throw in a couple of real big, like, sort of double digit winners. And so from the beginning of, down here to where this starts, beginning in November till right now, it's been a pretty good cycle here, and especially with the market, up at all-time highs. So anyway, real quick, I thought maybe we would take a look at some of the pending trades, and then I'll wrap this up. Let's see, what do we have pending here? The list is starting to actually build up a little bit. This is pending. It's dated 12/22, and so this is the one that last week I was using as sort of an example. I was using this as an example, and so it's changed a little bit here. So let me move this around. So here's what I'm going to do is I'm going to, and the funny thing is, it's not really funny, but I didn't mark the levels. Like, this is where it would have hit well, I don't know that for sure, but looks like where my mock-up of a trigger price. This looks like maybe where it hit the list initially, right, or something. And then this looks like sort of my mock-up of a channel break and the price breaking out here. So let me get rid of some of this stuff. And what I will do is I'll just actually 113.50. Where is 113.50 is the current trigger, which basically looks like, it kind of looks like trend line break there. So I'll just mark that on here. So next week, and so here's the thing is, if it busts out, I'll get rid of this too. 113.50. So if this thing breaks out and forms a big cup here, closes over 113.50, then it triggers in. If instead it drifts down towards the bottom of this channel, well, then this potentially can sort of ride down, and it can even get inside the channel, right? Here, my channel's all skewed because I didn't connect the bottoms. There we go. So that's basically it. It does, honestly, it doesn't look all that great right now. As far as like if it popped up here and closed over the trigger, but sometimes they do weird stuff. Like it had this huge gap up here, pulled back for a few days, and then just reversed right back up. And so it could easily do something similar here. Pull back for a little bit and just bust right back out and back up towards the highs. So anyway, it's got a pretty good look to it. So this particular trigger price can and will move. It can be day to day. It just depends on the price action. So here's another good one. If you didn't know what this was, if you didn't know this was Boeing, you could look at this and say, hey, this looks pretty good. So this I did mark up last week, right? Trigger 229. And so now the trigger has moved down to 225. So that's basically how it works. So what I'm going to do, I'm going to change that to just say 229, and then I'm just going to put 225 here. And so this way when we come back next week, I'll kind of have a better idea of what I was actually doing here. So I think you get the idea though. So it's actually a little bit higher here, but there you go. And so if Boeing like like say it had a big down day, down here to 205 or something. I mean and this is not necessarily just going to ride down this trend line. That's sort of happenstance. It's kind of a coincidence, but is it? I don't know. Because the system that's running all this stuff is it's not it trust me, it's not looking at this trend line, because the only data that it has is open, high, low, close, volume, and then of course, it calculates the ranges and all this different stuff, and so it's not really designed to say, hey, there's a trend line here, and if that trend line breaks, which is clear because sometimes you'll see me draw a trend line across the highs, and the trigger price will be, prior, under the trend line break, right? But it just so happens that occasionally, and actually more times than not, as you guys have seen me draw these lines, over the past year, that the everything that's happening is very consistent with good technical analysis. And quite frankly, I mean, this is what this is saying. If it wasn't even for the system, if I looked at this, I'd just draw a trend line and say, well, it's below overhead resistance, so wait for a break of that trend line, right? And so that's basically what the system is showing you. So moving on, let me just jam through the rest of these real quick. This mRNA, which is a vaccine maker, quite frankly, it's sort of interesting that it's in this sort of pullback here, right? It's kind of interesting that it's selling down like this, but it is what it is. So it made a move from 70 to 170, and now it's having a little bit of a pullback here, and yeah, that gap's filled. So that's I guess that's a positive sign. But anyway, so this one, this is potentially setting up at some point. Whenever I see like a stock like this, it's made a huge move and then goes into a big sell-off like this, there's the overhead resistance line. This thing, quite frankly, could break that trend line just by trading sideways for a period of time. But generally speaking, even if you weren't using the system, I'd look at a chart like this. I just draw a trend line and say that yeah, I would stay away from the stock below this overhead resistance. And nowadays there's a lot of people out there, and it's fashionable to say, well, technical analysis, doesn't work anymore, or this and that, and it's not useful. And the argue I won't say argument, but here's the thing about technical analysis. Like it's sort of like a law of nature, right? I mean, there's very esoteric technical analysis that, may or may not be useful, or, whatever. But here's what I like to say, okay. So this stock's at 113, and I just draw a horizontal line in the chart here, and like right there, and I'll say it's a law of nature that this stock, can't get back to the highs. It can't get back to the highs, or it can't make a new high without crossing this line first, right? And so, I mean, yeah, sure, it could gap over it, but until it breaks above this level, it can't rally up back up to the highs or make a new high. It can't get to 200 without crossing 120 first, right? So that's kind of like, it's like a law of nature. It's logic. And so that's where technical analysis sort of comes in handy, right? And oh, by the way, the as far as the trigger goes, it's still way up here. And so what that's telling me is that one thing, that the stock is so volatile that you don't just necessarily, the first time you see it peak above this trend line doesn't guarantee that there's a change in trend. But depending on what happens here, everything's a function of price and time. So I will mark that right now. The other thing about the trigger price, like this trigger price being at 132 now, is um, it gives the stock like time to sort of base out. Like I would expect this to ease itself down, and then um, theoretically, the trigger price could meet the trend line break out at a further point in time, or it could get below the trend line break. I mean, who knows? At this point here, like if the stock broke the trend line, it would be well, I guess it's be pretty close to 132. It's hard to say, but anyway, so that's that. Real quick, I'm just going to go through the other ones. Pfizer's actually setting up pretty good. That's what you want to see. This little like a sort of a consolidation here. So Pfizer setting up pretty good. To tell you the truth. Interesting to see Pfizer and mRNA on the pending list, but the chart patterns possess the characteristics that the system is looking for, and there's Walmart. So Walmart setting up, and then last but not least, ABC. Oh, this is a good one. Look at this. Um, so ABC has been on the pending list since 11/23, since back over here, and so this was my example of sort of how the you know how things work. So anyhow, you can see that last week I marked this up and it was at 99.50. This week we're down to 98.40. And so there you go. Just just sort of a good look at these are the trigger prices, like week to week. As I've been doing this show, this shows is I would say is the best example probably I've ever seen of how the trigger price starts off at like sort of a weird level, like when it hit when a stock first hits the pending list, a lot of times the trigger's way above what you think you'd want to buy it at, and this wasn't necessarily the case here with this first one, but anyway, you can just see sort of how it's designed to come down and meet the price. And so this is actually, quite frankly, this is almost a picture perfect sort of long duration sort of sell down. And so now basically, if the price is able to get something going to the upside and you get a close over 98.40, well then this is a go. So take a little bit longer view of this. Yeah, and I mean, quite frankly, after this sell down, if you get a break out of this sort of range triangle here, not really a triangle, what I'm saying, wedge, you could get some significant upside. So there you go. Anyway, that's a good example of how the pending list and the trigger price works. So anyhow, thanks for tuning in. Have a safe and happy new year, and I will see you back here next Wednesday. Same time, same place.